Hello there, everyone. Welcome to our latest episode of the Market Misbehavior podcast. My name is Dave Keller. I'm the founder of Market Misbehavior and the president and chief strategist of Sierra Alpha Research. It has been so much fun through the Market Misbehavior podcast to sit down virtually and in today's example in person with some fantastic market practitioners, educators, authors, investors, money managers, traders, strategists, anyone else that I can get a microphone in front of and talk about market conditions, process, and general investment approach. Today's discussion was recorded at the Las Vegas Money Show mid-February with Jordan Kimmel. Jordan's the founder of Magnet Investing Insights, multiple author of multiple books, particularly the Magnet Method of Investing we talked about. His Magnet Method is an acronym, Magnet, with 6 key components in a quantitative process that he designed through the course of his career to identify top stocks or stocks with compelling investment opportunities. We talked about a number of those letters, particularly the T, which stands for timing. So, there's a technical or momentum overlay along with valuations and earnings and other things that are part of the Magnet Method. We talked about how he's applying that method to the particular market environment in mid-February of 2025. Talked about one particular stock that had recently come up that he had shared with his members-only newsletter. I'm so thankful that he was able to talk through a particular example, just I think with really help to illustrate how he generally approaches things. We talked about his experience in the financial market starting in 1986, just before the '87 crash. Some of those lessons learned in his formative years, why he gravitated to more quantitative methods of investing, and how that it continues to inform his process here in 2025. We talked about balancing the bottom-up stock picking process with more of a top-down macro process, particularly at a time when it feels like macro themes are so important. We talked about risk management and why good money management skills really helps to enhance the success of a quantitative approach. We also talked about his latest book called Invest in the Now, which talks about the importance of mindfulness and mindset, mental states, and how you approach the markets, and the inspiration to improve your market awareness, a topic that certainly resonated with me with market misbehavior and my own approach to encourage mindfulness and focusing on gathering evidence based on the current market environment. A really fun conversation with an investor who, through the course of his career, sort of navigated or rotated from kind of traditional fundamental broker style investing to more quantitative methods. Some of the books that he's written and the insights that he learned from those, and how he's applying them to the markets here in early 2025. So please enjoy this conversation with Jordan Kimmel, founder of Magnet Investing Insights. So it's a pleasure to be sitting down here with Jordan Kimmel. Jordan's the founder of Magnet Investing Insights. Jordan, it's so good to finally meet you in person. I appreciate you coming on the show.
Been around a long time, a big fan of the Money Show for many years.
You and me both,
Glad to be back and glad to be with you.
Yeah, no, it's a pleasure. A lot I want to ask you about. You're presenting a couple times here at the show on some of the methodologies you've developed over your career. The Magnet Investing approach is in particular one that I'd love to go through. Let's start there. I mean, when you've written a book called The Magnet Method of Investing, I believe.
So let me bring it to it. So years and years ago, I got in the industry back in the mid-'80s.
Okay.
I was working at brokerage firms which would tell you what to sell. I was buying stock when I was in high school and before high school, and I had a methodology that I believed in. And so I said, you know what? I can't work. I was with Penny Weber, Morgan Stanley, A.G. Edwards. I said, it's time to go out on my own.
Okay.
And there I said, now it's time to share the philosophy of really what this is.
Yeah.
So David, it really comes down to the fact that there's value investors, there's growth investors, there's momentum investors.
Yep.
I said, why not have it all? Why not have it all? Why should I just invest in a slow growth company that's a good value? So long story short, I went to the University of Stony Brook out on Long Island.
Yeah.
I paid for my own college. And I like to say, back in the day, there was Jim Simons running the math department.
Right.
And Jim Simons, there was no better mathematician.
For sure.
Period.
Yeah.
He had a merry men of women, professors, PhDs, and after a few years in the with Magnet, I said, it's time to actually start a fund, and I want to write this book.
Yeah.
And I was introduced to Dr. Owen Carroll, who was with Jim Simons.
Okay.
And he was a PhD that specialized in chaos theory.
Right.
And so he said, show me what you're doing. We try to model things that are unmodelable.
Yes.
And he said, listen, literally no one's doing what you're doing. And people would say to me, blend value growth and momentum, that's dumb.
Yeah.
It's dumb, don't bother.
Right.
Well, Owen said, we'll probably be able to sell this to Wall Street. A couple years later, John Nuveen, $1 trillion assets, but specialized in bonds, and they wanted to have equity products.
Okay.
They did a bake-off, and we won. And it's been a great career since then, and I've sub-advised the brokerage firms.
Yeah.
We run individual managed accounts where people can see their account, but there is literally nothing exactly like the Magnet model.
Yeah.
But going back to the money show, David.
Yep.
I would sit, Louis Navalier, I would sit in the front row, and he'd say, you're here again? And I'd say, every time I hear you, I learn something.
Yeah.
And I'd ask all those people, I'd say, could I take you to breakfast, lunch, or dinner?
Yeah.
What makes you special? What makes you unique?
Yeah.
And what 2 books should I read? That's all the kind of filtering that went into creating Magnet.
Right.
And years later, there's been some modifications, but we even took Magnet to the next level, and where we look for the most trustworthy companies in America.
Okay.
And I believe that's what my legacy will end up being.
Wait, what do you mean when you say trustworthiness? How do you actually measure that?
You see that? That's the biggest question, because people would say it's a weird term.
Yes.
Well, what happened was, we again, with my background, said, well, I don't know a lot about trust. I don't know. Let's find consultants to the 100, to the CEOs, and ask them, if you were going to evaluate trust, what would you evaluate? The words came up: transparency of operations, corporate governance. Does the CEO vote on his own salary? Is, all these kind of intricate things. Is the board independent? And so we went through, and the names kept coming up, and we said, is there any way to get independent data?
Yes, to verify all of those things.
Not questionnaires, not polls. I don't mean to hurt anyone's feelings. Not best places to work, which is kind of managed and so on. But independent data. Now, Dave, what happened was WorldCom and Enron created this new cottage industry of companies that would rank companies based on corporate governance, based on transparency of operations. And so what we did is, having a little bit of New York chutzpah, I got the heads of all the families together. The guys who were selling the A data, the accounting data, and I said, I'm going to take all of your data and I'm going to blend it, like, instead of value growth and momentum, it's going to be transparency, accountability, financial stability, and we created something called FACS. And the FACS model is, on Index 1, they run the index every day. It's ahead of the S&P for 13 years.
Wow.
Even though the benchmark is really Russell 1000. So what we're basically saying is, we need to bring trust back into Wall Street. And I'm telling you, the 08, 07 era taught us a whole lot. And if you had your ears open, you learned a lot. So we have, the Magnet is really a more aggressive strategy with smaller companies, fast growth. And then the FACS takes my Magnet model and says, do we have data for corporate governance for this company? Do we have data for all these other things?
So it's sort of an overlay on top of the Magnet model,
right? It's a quality overlay.
It's
a quality overlay. And so they both work. They both have worked. But again, I like to share, I don't walk on water. And you might have another question, but I was going to share that we actually came out with something called the Pro Investors Insight newsletter just a couple months ago. Navalier's writing an article, Barron's is writing an article, Interactive Broker's writing an article, I write 2 articles, and it's absolutely complimentary. And what we're basically saying is there's a lot of ways to make money in the market. I have my methodology, might not be suitable to you.
Yep.
He has a different this bond and real estate, and there's a lot of asset classes.
Right.
So Pro Investors Insights is something we're really proud of.
That's great.
And every month, Dave, I've given 10 stocks. Mm-hmm. And you might guess by the thing I'm bringing it up, the returns have been kind of nutty.
I would assume that's probably part of why you're bringing it up. But congrats on that, and congrats on every step of that has been pretty meaningful. So remind me, when did you get started in the industry? When were you sort of having your formative years?
1986. I got my first license. What happened
Perfect timing right there.
Well, here's what happened. I graduated from Stony Brook.
Yeah.
And it was a master's program for public administration.
Okay.
I went down, worked for Ed Koch in New York City.
Wow.
And they said, you'll be the youngest commissioner in town.
Okay.
And I said, well, the mayor's making $110,000. I'm going to be a commissioner. I don't come from money.
Yeah.
I don't want all the power. I'm heading down to Wall Street. So I headed down to Wall Street in '86.
Okay.
Selling muni bonds, and every $5,000 of savings, I buy another stock.
Okay.
I love stocks, and I said, what am I doing in the bond market, selling bonds?
Yeah.
And Magnet was created.
So the Magnet model, right? I mean, it's an acronym, and each one of those measures a particular thing. And I really enjoyed digging into the model a little bit. A lot of my viewers and listeners are very focused on technical analysis as part of their process. Okay. And the T seem to be timing needs to be perfect, or timing needs to be right. Can you talk about the timing aspect about,
Definitely.
Sometimes good companies don't make good investments. So what is that timing aspect for you?
So I shared in my breakout, there was an old guy named Will Rogers.
Okay.
He's a cowboy.
Yeah.
He said all stocks are bad. Right. All of them are bad.
Yeah.
I only buy the ones that are going up.
Okay.
And if they stop going up, I sell them. And so the Magnet model has 17 fundamental criteria for margins, margin acceleration, revenue acceleration, all the fundamentals. Yep. But like you say, companies can go sideways or do nothing for years and years and years.
Yep.
So number 18 on our quantitative thing is what is the 26-week relative strength versus the market?
Got it. Okay.
Factor 19 is what's the 52-week?
Got it.
Just to make sure that we're going up.
These are names that are outperforming over a good look-back period.
And then we ask why. What's the revenue growth? What's the price of sales? Then we go into all the metrics. And then, using this data for years and years, I said to my team, I have a shortcut.
Yeah.
I have a shortcut.
Okay.
Let's take a look at if the momentum from 52 weeks increased, and now the 26 is better than the 52, it means there's some acceleration.
Yep.
So I'm saying these stocks, I don't care what you think, your politics, I don't care what you think, these stocks not only have done okay in the last year, but there's a feeling of acceleration going on with them.
Yeah.
And so technically they have to be right. And what that means too is I showed in the newsletter Palantir, like I was on TV talking about Palantir at 10.
Yeah.
Palantir is not a buy today.
Okay.
In my opinion.
Yeah.
Yes, it has a lot of momentum.
Yep.
But it's too much. It's not technically poised for an advance.
Yeah.
It was technically poised when they come out of the base. I really do believe in technical analysis a lot.
Good.
And one of my guys on my team.
We got that on the recording, I think. Good. Okay.
One of the guys on my team doesn't look at fundamentals. He's a certified technical. Certified technical.
Good.
We love to take his technical, and he says, Jordan, I don't know why this looks great.
Yeah.
And we run it through Magnet, and we look again, and we just keep machining it, machining it.
Yes. So part of my background is at Fidelity Investments, and we did a lot of sort of cross-pollination between the fundamental and the technical teams, looking for good companies with good stories, good growth prospects, but also good trends and good charts. And it sounds like that's how you're kind of trying to combine those in a meaningful way, which is good.
We showed the tip of the bell curve. The argument was, how are you going to find these?
Yes.
How many are there?
Yeah. It feels like you're filtering out everything all of a sudden,
and
right?
You know what? That's fine.
Yeah.
Because the truth is, we want to boil it down to 25 companies. When you show up at an all-star game in sports, the guys that get cut that are great players that don't make the all-star team.
Yeah.
They're really good players, but if you are in our portfolio, you have currently accelerating revenues, accelerating margins, good stock price, institutions buying, and some of those go down too, David, as we know.
Yeah.
So the secret is trusting the model, letting them into the pool, and like what we say is, get on the bus and face forward, and don't move. And if invariably one stock will jump up and move its arms around and get wild and volatile, and we politely take it out of the portfolio, and we don't argue.
So you mentioned Palantir is one that probably doesn't score as well because of the run maybe that it's had. What types of things are scoring well early 2025? Like where are you seeing opportunities? Because a lot of things have had that run, right, from 2024. A lot of growth names are up a ton already. What scores well these days in your work?
Okay, so I'm not going to play bait and switch. It's in my newsletter. The stocks are there, but let me give you one.
Give me an idea.
I'll give you an example.
Okay.
So there's a company called BYRN.
Okay.
And what BYRN makes is non-lethal weapons for self-defense.
Okay.
Pepper spray, these inexpensive guns that will literally make someone inoperative. They come into your house and you got to defend yourself. You don't want to kill them.
Right.
But you don't want them to take one more step forward.
Yeah.
So I don't know if it's a great idea, but Magnet says, well, there's triple-digit revenue growth.
Yeah.
Triple-digit revenue growth. The stock looks great. The next thing I did was I went on their internet site and I bought some pepper spray to see what their customer service looked like.
Yeah, right.
It was fantastic.
Okay.
So BYRN is in our portfolio. It's not an idea that we're looking at.
Yeah.
It's in the portfolio. It's in the newsletter.
Yeah.
And it is a great stock today.
Yeah.
Next year, I'm not sure.
Yeah.
But we'll continue to. It's on the bus and it's facing forward, and it might be hitting a new high today.
A lot of what you've talked about so far, Jordan, is really what I describe as a bottom-up process, right? Looking at characteristics, looking at companies that demonstrate good characteristics. How do you relate that to more of the big picture macro kind of perspective? Because we're at one of those times when it feels like at some point, like the macro, the Fed, the geopolitical issues sort of dominate. How do you, I guess, respect the macro conditions, or do you just sort of ignore them and just focus on good stories, good companies? Right. How do you incorporate that into your process?
So I love it. So the answer is that the model actually does the work up front. Like when it picked Palantir at 9, it picked AppLovin at 70.
Yeah, right.
I didn't know that these companies were going to come into the front, but if you see the revenue growth, if you see the margin growth, now what we're talking about is you can't move one step without hearing that AI is going to transform every single thing. Will it transform? Yes, it will. Will there be a gigantic shakeout coming? Yes, there will. Right now, Palantir is the single most expensive stock in the market based on price to sales.
Sure. Oh, yeah.
Is the future good? Probably.
Yeah.
Is it a good entry point? Absolutely not. So the thing is, if anything, David, rather than pull me into a sector, what happens is you begin to hear the drumbeat. You begin to hear louder and louder, louder and louder, louder and louder to a crescendo. And then you say, everybody's in. I'm stepping aside. Yeah. And we're already there in many of these AI enablers, the companies that sell the chips. Yeah. Who sells the chips? Does anyone guess? Right? And then Palantir. But what's going to happen is that there's going to be large companies adopting AI use cases to get incrementally better. And you take a multi-billion-dollar company that gets 5% better and more efficient, it translates to the bottom line. So it will be transformative, but someone a minute ago said, hey, does this remind you of 2000?
Yeah, right.
And so Sun Microsystem was the stock you said, listen, there's going to be more and more servers. They have a 90% of the server market.
Yes.
How do you think this company doesn't succeed? Well, that was 80. It was bought out at 1. Okay? And so you can go over and over JDSU. So if you remember JDSU, what they said is they're going to lay pipes. Sound familiar? Under the Atlantic Ocean so that there could be high-speed transmission of data. Unbelievable. And they were saying you can't own enough JDSU. JDSU is currently out of business. There's no bid on the stock, and the cables have been laid.
Right.
and the transmission is happening, JDSU is out of business.
Yeah.
So the main point here is that I do hear a crescendo coming. I hear it coming. That doesn't mean AI is not going to be successful.
Yeah.
But everyone needs to remember that NVIDIA was down about 70% in the year 2022.
Yeah.
That wasn't a long time ago. Oof. You're going to get another time to buy NVIDIA. It's not today, in my opinion.
Yeah. What does risk management mean to you? Because you're talking about a model that it's identifying good companies, good trends. What is it, what's the exit strategy on these? Is it valuations? Is it trends? I mean, just the things not going up anymore? Like, what deserves a removal from the portfolio, in your opinion? What kind of things are you looking for?
So, because we're kind of free in letting companies in the portfolio, we have to be very careful they behave and they don't cause a lot of problems.
That they still deserve a spot,
they still
I guess,
deserve
right?
a spot. So the real answer is stocks will go up way more than you think they will.
Yeah.
And it's a whole idea of like, if you make 20%, you have to sell, you have to book the profit. That's complete nonsense, right?
Right.
So what you do is, once they start in motion, you could actually create a trend line.
Yeah.
And if they stay above that trend line, go golfing, go swimming, do something else. Stop looking at your screen.
Yeah.
But if they break the trend line, there's no but. It's a good company.
Yeah.
They've broken the trend line. It's no longer going up. So, like I shared in a breakout session. So look at the macro. I'm telling you that people are going to be flying like crazy. Middle class people. I'm telling you, 1980.
Yeah.
So what are you going to do? If you trust me, believe me, you buy Pan Am and you buy TWA.
For sure.
And neither of them are in business anymore. So the whole idea is like athletes come and go, actresses and actors come and go. The movie budget gets bigger, but it's different stars.
Yeah.
And so the whole idea is I run this model, which is incredibly discriminating to begin with, eliminating everyone without revenue growth, margin growth, eliminate. And then if a company does break out of a kind of a well-defined base, I buy that stock. I'll buy another third, I'll buy another third, I'll buy another third, and keep going. But if a stock breaks a trend line, I think of Bethlehem Steel, I think of Woolworths.
Yeah.
People don't even know the name Woolworths. It was the largest retailer in America.
Yeah.
You know? They don't even know the name anymore. So companies will come and go. And I have kids. That's different. They can make mistakes. Companies are not allowed in the portfolio if they move their hands around and act real crazy.
I love that comment about using the charts as a way of just recognizing when good companies just no longer seem to be a good fit. So one final question here, and then we're out of time. We've talked all about quantitative methodology, finding good opportunities. Your most recent book, though, is more about mindset and mindfulness, called Invest in the Now. Can you talk to us just briefly about how that fits into what's that mindset overlay that allows you to be successful?
Fantastic. So, the whole world of meditation and being in the present moment. And so I have a couple of people that do some marketing, and they're really into the now, the present, and very spiritual too. And I said, you know what? The magnet model is all about what's now. Not what's going to be. I don't know what's going to happen in the future. So I actually invest in the now myself. I said,
Love it.
I said, rather than have another book like this, what we did is we have 108 quotes that are mindset quotes. Some of them are investing, some of them are actors, actresses, athletes. I have a couple quotes, but only a couple. And it's about understanding that, hey, you may have lost money in a biotech years ago. What, you hate biotech? You may have lost money once in a chip company. So you're going to live in the past and regret that. It's a new day. It's a new era. And then on the other side of that, though, is people will tell you exactly what's going to happen in 10 years from now. And I'm saying, you don't know what's going to happen next week.
That's right.
So let's stay in the now.
Yes.
On the spreadsheet, I mentioned BYRN. BYRN currently is currently a top-ranked stock on the sheet.
Yeah.
It's in our portfolio. There's a trend line with a well-defined stop.
Yeah.
If it hits that stop, I throw up my hands, I take a walk.
Yeah.
It's out of the portfolio, and I won't argue. But
yeah.
the whole idea of the mindset that people have with money, and
yes.
their relationship with money.
Yes.
I have a brilliant older brother who only loses money in the stock market. He does. Albert Einstein lost a lot of money in the stock market.
That's true, right?
You know?
Yeah.
So the whole idea is having a mindset that we don't know the future.
Yes.
I'm unburdened by the past.
Yep.
I want to own the best companies today in the now.
Yeah.
And David, I don't know what's going to be in the portfolio next month.
Right.
We'll see what happens
We'll
next.
see what happens. So in my own work, we do a lot of what we call market awareness. We are kindred spirits in getting people to focus on the now and what's happening. And I hope in this conversation, people got a sense of how the magnet method and other things we talk about could do it. Jordan, it's such a pleasure to meet you. Thanks so much for sitting down with me. Enjoy the rest of the show, and I hope we can keep the conversation going another time, all right?
Positively will. Great to be part of the Money Show, and I'm glad everyone's here.
Fantastic.
Thanks again.
It was a lot of fun talking with Jordan Kimmel. I'd heard of Jordan and his work, but it was a real pleasure to sit down with him at the Las Vegas Money Show in February and pick his brain a bit. And again, I've enjoyed talking with more quantitative investors through the course of my career, for sure. But on the Market Misbehavior podcast, it reminded me a bit of my conversation with Mike Turner of Turner Capital. Really focusing on quantitative methodologies for Mike. It's more of a big picture, process analyzing the S&P. With Jordan, it's more about a bottom-up stock picking process. Reminded me a lot of just the philosophy that we would use at a big money management operation. Just using quantitative methods to help filter through and sort through the thousands of companies we could buy or sell on any given day. Just focus on the really actionable opportunities. I love thinking about that, what we call a multi-factor model, the use of technical analysis or timing, or what many call the momentum factor as part of that magnet method of investing. We'll have links to Jordan's books in the description below, along with where you can find more information about Jordan and his work. But I want to thank Jordan and the folks at the Money Show for providing the opportunity to have a great conversation about Jordan and his magnet method of investing. That's it for today's episode of the Market Misbehavior podcast. By the way, if you want to learn more about the T in the magnet method, particularly how we think about market timing, about timing stock investments, and focusing on the evidence the market is providing back to us as a way of improving our mindfulness, improving our market awareness as investors, our Market Misbehavior Premium members may be a really good opportunity for you. 3 great benefits of the premium membership. Number 1, access to all of our virtual courses. We're actually working on a course now on technical indicators to help you focus on particular buy and sell signals, how you can use indicators along with other methods of investing. We also have existing courses on behavioral investing, on applying behavioral investing techniques and minimizing behavioral biases using technical analysis tools and techniques. Our second main benefit would be access to all of our members-only reports, our weekly flight plan, which we put out every weekend, and our monthly chart review, which we just put out the first week in March, focusing on our market trend model and applying that to different ETFs and asset classes. Finally, you'll have access to our members-only community where you can ask questions from me. I'm in there every day answering questions from our premium members. You may also see some of our other premium members weighing in with their own thoughts and insights, and a great opportunity to see what other similar-minded investors are asking as we all try to navigate these markets together. It's a supportive, growing, and vibrant community of technical-oriented investors, and I hope you'll consider being a part of it. You can find more information on our premium memberships at marketmisbehavior.com/premium. Don't forget to use the code PODCAST when you check out for 30% off your first 12 months on any plan. That's it for today. Thanks so much for joining me on the Market Misbehavior podcast. I'm Dave Keller, and remember, it's always a good time to own good charts.